Hello, this is Alex from ONG Tax and Accounting Services. So in this video, we're going to talk about the Corporate Transparency Act, which is a law that was passed by Congress on January 1, 2021. Now, this law is very huge because it is estimated to affect about 32 million entities that are formed in the US, including certain foreign entities that are registered to do business in the US. Now, to start off, let's throw a word of caution out there that this video is for educational purposes only. It is not meant to be a legal or tax advice. And if at any point in time you need a legal or tax advice, you should always consult with a competent attorney or CPA who can be able to listen to your issue and help you out. Now, one may ask, why is this law important and why do we even need this law? This law is very important because Congress passed this to ensure that persons who form companies in the US disclose their beneficial owners of those companies they form. And why does Congress or why does the US need information about owners of the company? According to the law that was passed, this information is needed to prevent wrongdoers from exploiting the US system and to also assist law enforcement in preventing, detecting, and punishing terrorism and money laundering. So it's pretty simple on why this law is requiring companies to report who the owners are. So Congress delegated the rulemaking authority to Financial Crimes and Enforcement Network, which is Fincen, which is under the Department of Treasury. And according to Fincen final regulation that was issued on September 29, 2022, Fincen has set the effective date for this reporting requirement to be 2024. So beginning 2024, domestic companies or companies that are formed in the US and certain foreign entities that have registered to do business in the US are required to disclose their ownership information. So whether the company is existing before 2024 or whether you formed it on 2024 or after 2024, this law captures all of these companies. Now let's look at the law in detail. What is the Corporate Transparency Act? As I indicated earlier, on September 29, 2022, Fincen issued a final regulation which requires a reporting company to report to Fincen specific information about 1. The reporting company itself, 2. Each beneficial owner of the company, and then 3. The company applicant. So to fall under this reporting requirement, you first need to be a reporting company. So what is a reporting company under this law? Now, a reporting company can be a domestic reporting company or a foreign reporting company. You are a domestic reporting company if you're a company that is formed in any state within the US, including any tribal jurisdiction. Now, the regulation also specifies the specific state that comes under this regulation. So we're going to go ahead and tell you what these states are. So the term state of the United States means that any state in the US, the District of Columbia, the Commonwealth of Puerto Rico, the Commonwealth of Northern Mariana Island, American Samoa, Guam, United States Virgin Island, and any other Commonwealth territory or possession of the United States. So if you have a company that's formed in any of these jurisdictions that I have mentioned, you fall under the category of a domestic reporting company and you're required to report beneficial ownership information. Now, let's move on to the second category, which is a foreign reporting company. Now, a foreign reporting company includes a corporation, an LLC, or any other entity that is formed under the laws of a foreign country. So if you are a company formed under the laws of a foreign country, you are a foreign reporting company, but it doesn't end there. That foreign company must have been registered to do business in the US or any of this jurisdiction that I have mentioned before we consider you as a foreign reporting entity. So you could just be a foreign entity But if you have no connection in the US, you haven't registered to do any business in the US, then this law does not capture you. The law only captures foreign companies that have registered within a specific state or a tribal jurisdiction to do business in the US. Now let's look at the type of information that a reporting company should be submitting to Fincen about itself. So for the initial report, the final regulation requires a reporting company to identify itself by providing the following information. So first, Fincen needs the full legal name of the reporting company. It needs any trade name or DBAs that you've registered under the company. It needs a current address, so it could be it is the principal place of business for this company. The state, the tribal or the foreign jurisdiction of formation. So you have to state which state or the tribal jurisdiction or foreign jurisdiction that this company was formed. And then finally, you're also going to state your company identification number. In most cases, it's going to be your employer identification number. However, the final rule provides certain guidance, especially to foreign companies that have not gotten their EIN yet. The final rule requires that if you're a foreign company and you don't have an EIN, you could still use a foreign tax ID that is issued in your country. So we've looked at what a reporting company is required to report about itself. How about a beneficial owner? Before we figure out the type of information needed for a beneficial owner, let's go ahead and define who a beneficial owner is. So the final rule defines a beneficial owner with respect to a reporting company as any individual who directly or indirectly either exercises substantial control over the reporting company or owns or controls at least 25% of the ownership interest of a reporting company. Now, these two definitions here have been simplified, but when you go into the rules explain who exercises substantial control, and then it also explained for various types of entities, whether it's a corporation or entities that issues ownership interest or profit interest or capital interest. It defines who owns or control at least 25% of the ownership interest. So if you want to know more about this, if you have a very complicated ownership structure and you don't know who the owners are, I would advise that you read the regulation very well, because it does a good job detailing out who the owners are. The regulation also states that in most cases, most of these companies that are formed have a very simplified ownership structure and it's easy to figure out who the owners are. But if you have a very complicated structure, I would always advise you to read the final regulation in details to figure out who the owners of these companies are. Now, what information should a reporting company provide with respect or with regards to the beneficial owner? Now, the final regulation requires that the reporting company must provide the full legal name of the owner, the date of birth, the current residential address for beneficial owners, the unique identifying number from acceptable identification document. So the final regulation lists the type of identification document that you would need to report ownership information. So for example, one of the requirements is that you can provide an unexpired passport. And then also, after you've provided all these items listed here, you also need to provide an image or a copy of that identifying document that you're using. Now let's look at who is a company applicant. In the case of a domestic reporting company, the final rule defines a company applicant to be the individual that files the document that creates the domestic reporting company. So if you are the owner of a company and you went to someone, maybe an attorney or CPA or corporate organizer, to form a company for you, that will be the company applicant. And you, the person that owns the company, is the beneficial owner. And then in the case of the foreign reporting company, a company applicant will be the individual who files a document that first registered the entity to do business in the US. Again, same. Most people, when they're forming companies, they either use an attorney or a CPA or some kind of a corporate organizer or a nominee to do it. So those people would be the company applicant. Now, what information should a reporting company provide with regards to the company applicant? So remember, let's recap again. The Corporate Transparency Act requires that the reporting company report 3 sets of information. One is information about the company itself, which we've looked at, information about the beneficial owner, which we've looked at, and then on this slide, we're going to talk about the information that you need from the company applicant. So it's going to be the full legal name of the company applicant, the date of birth, the business address for the company applicant, unique identifying number from an acceptable identification document. So it could be a passport number. And then also, if you're providing a passport, it should not be expired. It should be current. And then you also need to provide the image of that document that you're using. It is important to stress on the fact that the final rule eliminates the company applicant reporting requirement for existing reporting companies, but not for companies created or registered after January 1, 2024. So let's explain this. This simply means that if you're filing these forms and the company existed before January 1, 2024, you don't have to report company applicant information. So basically, if the company existed before the effective date, before January 1, 2024, all you need to do is to report information about the reporting company itself, and then also report information about the beneficial owner. But you're not required to report the company applicant information if you are an existing company. Now, for companies that were formed after January 1, 2024, you are required to report all those 3 information, which is the information about the company itself, beneficial owner, and the company applicant. Now let's look at when the initial report is due. For domestic and foreign reporting companies created before the effective date, which is January 1, 2024. So if you're a company that existed before January 1, 2024, you would have 1 year to file your initial report. So that means that your report should be filed not later than January 1, 2025. This means that even if you're late, you should not exceed the January 1, 2025. You can file from January 1, 2024 to December 31st, 2024. Or if you want to be really late, then you should file on January 1, 2025, because that is the final date to file. But you can file from anywhere from January 1, 2024 to January 1, 2025. So it gives you a 1 year time to file the initial report. Fincen is currently developing the database for this reporting. It's not ready yet, and they're going to be working on it. So whenever it's ready, we're going to announce it. Now, secondly, domestic and foreign reporting companies created on or after January 1, 2024 would have 30 calendar days to file. So it's pretty simple. As we have already indicated, if you're a company that was formed before January 1, 2024, you have 1 year to file. If you're a company that was formed on January 1, 2024 or after that, you would have 30 days to file. So for any company that was formed on the effective date or after the effective date, you have 30 calendar days to file the initial report. And if you want to know what you need to file, we've addressed them in the previous slides. One will ask, is this reporting going to be very continuous? Do I have to file every year? No. The regulation says that once the initial reporting is completed, you are only required to file with Fincen if you are updating a record or correcting an information that you provided. So reporting companies only required to subsequently update the report if there are changes or new information. So after you file the initial report and the initial report is completed, you don't have to file any other report unless certain information about the reporting company or the beneficial owners have changed, and then you would go into the system and update the report. Or if there's any new changes or you provided incorrect information, you would have to update it. The final rule eliminates the company applicant reporting requirement for existing reporting companies, and we've stated that, but not for companies created or registered after January 1, 2024. So if your company existed before 2024, you don't have to report company applicant information. If your company was formed on January 1, 2024 or after January 1, 2024, then you need to report the company applicant information. So you would have 3 sets of information. You need to report information about the company itself, the beneficial owners, and the company applicant. Now, we indicated that once the initial report is filed, the only time that you need to go back to Fincen to do anything about your company is when you need to update the beneficial ownership information report. So there's the updated part of this rulemaking. If you want to update your report, when is it due? Reporting companies would have 30 calendar days to update the information that has changed after filing. So if any information has changed since you filed the initial return, you have 30 days. Reporting companies would have to file a report within 30 calendar days after the date on which the entity no longer meets any exemption criteria. There are some exemptions that we'll talk about soon. Not all companies are required to report ownership information. They are exempted. So it's saying that if your company is no longer exempted, then you would have 30 days to file your reports. If a reporting company also becomes exempt, so let's say you used to be a reporting company, but then you all of a sudden become exempt after filing an initial report, this change will also be deemed a change that will require an updated report. So you need to update that once you become exempt. Reporting companies that are formed or registered after the effective date. After the effective date means that anything after January 1, 2024 do not need to update company applicant information. So remember when I said that if you're a company that was formed on January 1, 2024 or after January 1, 2024, you're required in your initial report, you're required to report information about the company itself, the beneficial owners, and then the company applicant. The regulation says that if you're updating your report, you don't have to provide any information about the company applicant. You're good to go. So once you file your initial report and reported everything, any updates you make, you can take the company applicant information out of it. It does not matter. So it's essentially, the only update you need to be making is updates about the company itself and the beneficial owners. To most of US rules, there are exceptions. So we're going to talk about these exceptions and the exemptions that the Corporate Transparency Act provide to certain reporting companies. The final regulation describes 5 exceptions to the definition of beneficial owners that are included in the Corporate Transparency Act. These exceptions relate to minor children. So with the issue of minor children, if a minor owns a company and the parent reports that information in the parent's name, then the minor child will not be required to report anything. And then you have issues of nominees, intermediary, and agent. If you're just a nominee and you're representing a company, that does not mean that you are the owner. So you are not required to report any information about yourself. The purpose of this rule is to get the real owners, not nominees or intermediaries or agents. And then you also have employees. If you're just working as an employee and it means that you're not the owner of the company, you don't have to report your information. You need to look for the owner to report their information, but not you as an employee. Now, sometimes you could be an employee and the owner at the same time, and you know yourself, and so you should report it. But if you're just a mere employee, then you don't have to report any information about yourself. Now, the regulation gives so much explanation about who employees are and who senior officers are and all of that. Certain senior officers are considered as owners of the company and are required to provide beneficial ownership information. But if you're purely employee, then you're not required to do that. Another issue is people that are inheritors. So if you've just been named in a will to be the owner of a company, if the living person dies, then you're not actually the owner until that person dies and the will is settled. So the regulation explains who the inheritors are. The fact that you've been named in a will does not make you an owner, but that person has to die and the estate has to be settled, and you have to be now named as the owner before you become a beneficial owner. So if you're just an inheritor, you qualify under the exceptions. And then creditors. the fact that a company owes you money does not make you the owner of the company. And so there's also an exception for creditors. Now, there's CTA also exempt from the definition of reporting company 23 types of entities that are exempt from submitting their beneficial ownership report. And that's because there's 23 entities that are listed in the final regulation. They are exempted because those entities are either generally subject to substantial federal and state regulation under which their beneficial ownership may be known. So there's heavy regulations that requires them to report their beneficial ownership, and that's already being done. And so they don't need to go under this process and report beneficial ownership information. So there's 23 type of entities. And if you want to know more about these entities, take a look at the final regulations. So let's talk about whether there's going to be any penalties under the CTA when you fail to file or provide information. Now, the final regulation provides that it is unlawful for any person to willfully provide or attempt to provide false or fraudulent information to Fincen, or to willfully fail to report complete or updated beneficial ownership information to Fincen. The final rule also provides for civil and criminal penalties for willfully providing false or fraudulent beneficial information. So you're being asked to report ownership information. It shouldn't be that hard or difficult. Just do it and be free. You don't want to be in a situation where you get convicted for some criminal stuff. I think this rule is very straightforward. If you're owner of a company, just report your information and be free. So we've talked about this effective date a lot. Let's end this whole presentation by refreshing you what the effective date is. The final rule sets an effective date for January 1, 2024. Reporting companies that are created or registered before January 1, 2024 would have 1 year to file their initial report. So you have until January 1, 2025 to file. If you were a company that's created or registered after January 1, 2024, you would have 30 days after the creation or the registration to file your initial report. You have to be mindful of these two categories and these two dates. There is date for those companies that existed before the effective date, and then there's also a different deadline for those that were formed on the effective date or after the effective date. Once the initial report has been filed, both existing and new reporting companies will have to file updates within 30 days of a change in their beneficial ownership information. And so once the initial report is filed, the only time you need to go back to Fincen is to update the report or correct certain information. Alright, so I hope this helps you guys out. I hope this has helped to explain some of the issues you may have with the Corporate Transparency Act. But there's more good stuff in the final regulations. It's about 300 pages. And I would advise any one of you that is interested in this regulation to spend some time, get some coffee, and read all of these regulations and some of the exceptions and the exemptions and certain comments that they received and how they responded to the comment. It's very helpful. If you have any question, feel free to email me. Also like, share, subscribe, and I'll come to you some other time on a different video. Thank you. And remember, the effective date for this regulation is January 1, 2024.